So now we move to the next part is how to generalize and post closing entry. Every one of you know how to prepare the ledgers, calculate, do the footing, calculate the balance for each ledgers or T account. So how we are going to record it in journal. So this is known as the closing process, whereby you're going to give temporary account zero balance, so they are prepared to accumulate new information for next accounting period. Okay. So for all revenue and expenses, you're going to close the account. You're going to change the balance instead of balance CD. Instead of balance CD, you don't want to have a balance CD. You want to close that account. So next year you're going to start your revenue from zero, your expense from zero. That is the idea. We're going to close our revenues and expense accounts, and we're going to start zero for next for every accounting year. So that is the purpose. Yeah. When I announce to the public that my sales for 2021 is 100 million, for example, my sales is 100 million. Next year, at the end of next year, when I make announcement, my sale is 150 million. That sale is only for year 2022, not for 2021. 2021, we already closed the account. We put it zero. Till the end, we are going to close the accounts to zero. So we're going to start fresh next year. So the process is the closing process. It involves 4 closing journal entries. Yeah, 4 closing journal entries. You have to remember this. The income summary account is used to aid in the closing process. So we have income summary account. We call it income summary account. Okay. So we also have a permanent account. What is permanent? Permanent account is account that won't be closed during the period. It will still have balance. So what are the accounts? Asset, liability, capital. So these are all balance sheet items. All these from balance sheet. So next year, when you start your accounts, we still have the asset, we still have the building, the cash, the receivable, we still have the liability and the capital. So this asset remains, yeah, remains. This account remains, yeah. So in a simple word, these accounts are not closed. So what account that we close? Revenue and expenses. So temporary accounts is accumulate information for specific accounting period. All account not on the balance sheet, that is revenues, expenses, and drawing. So we're going to close this account. We're going to close this account. Revenue, expenses, drawing. Another one is asset, liability, equity. This is permanent. This is permanent. So we have, what are the 4 steps? The first one, we're going to close our revenue account to income summary. We're going to close your revenue account to income summary. We have 2 T accounts here. For example, your delivery fees. This is your revenue credit 2150. So I'm going to close this account. So I'm going to do, this is credit. To close, I'm going to debit the accounts. Okay. So this is our delivery accounts. This is the process here. Yeah? This is the original value. So to reduce this balance to zero, we must debit the delivery fees account for 2150. I repeat, this is the original balance. So to close this account, I should debit the account. So 2150 credit. When I debit 2150, the balance will be 0. Okay. And then I'm going to put here income summary. Income summary. This is just temporary account. This is temporary account. Okay. I'm going to credit here income summary. I'm going to credit here income summary. So that is the first step to close the revenue accounts. How to close? Delivery fees is credit item. So to close, you need to debit the equal amount, 2150 debit, delivery fees, and then you're going to credit the temporary account known as income summary. If you have interest income, $50, so we're going to close that, debit interest income, $50, and credit income summary. So this is step number one. This is your step number one. Yeah. Okay. Step number two. Okay. So this is the journal entry. Okay. What is the journal entry? Debit delivery fees 2,150. Credit income summary 2,150. This is your temp account, temporary accounts. This is your temp account. Okay. Step number two, we are going to close all expenses. Yeah, all expense account. So always remember that expense is a debit. Nominal balance is a debit. This is your expense. So to close this account, you need to credit. You need to credit the accounts with the same amount. Yeah, with the same amount. So you're going to credit all expense accounts. Okay, expenses have debit balances. Therefore, to close them, they must be credited. Wages expense is now closed. 700 will be transferred to income summary. All expense accounts balance are combined, and income statement is the total is debited for the total. Okay. So, for example, you have wages. This is your balance 700. How to close these wages? Credit 700. So 700, it become 0. Supply 60 expense. 7 expense 60. So how to close this 60? You credit the same amount. Insurance expense 25. So we're going to credit 25. Rental expense 200. So I'm going to credit 200. So the balance will be 0. Phone expense 50. To close this account, I'm going to credit by 50. Depreciation expense 100. I'm going to close this account. I'm going to credit the accounts by 100. So after performing this task, okay, you will have a zero balance, zero balance, zero balance, zero balance, zero balance, and zero balance. Okay. And then you're going to have record all this. These are all credits. So the account you need to debit is your income summary account. So you total everything 760, 785, 985, okay? And then 985, 1,035 and 1,135. So this is the accounts where you debit the account. So this is your income summary. This is your revenue total. And this will give you your expenses, total expenses. Total expenses. Okay, this is step number two. Number one, close revenue. Number two is close your expense account. So what is the difference here? What is the difference between these two accounts? You can see that this is your revenue 2,150. This is your expense. The difference here is your profit. The difference is your profit. Okay, let me explain again. Let me explain one more time. In your accounts, we need to close all the revenues, all the expenses, drawing account. So what is the techniques? What is the techniques to close the accounts? If your delivery fees, the total delivery fees is 2,150, to close these accounts, you need to debit 2,150 and transfer that amount, credit the income summary by 2,150. So in that case, the balance will be 0. You are transferring the balance, the delivery fees, from individual delivery fees account to an income summary ledgers here. So this will be your 2,150. Same goes for your expense. Wages have a debit balance 700, supply 60, rental 200, phone 50, depreciation expense 100, insurance expense 25. You want to close all these expenses account. Yeah. So how are you going to do this? You're going to credit. Why? Because this is already debit. To close the account, you need to credit this account by equal amount. Yeah, 700, 60, 25, 200, 50, and 100. So you close all these accounts by doing that, and the total will be your put it in your income statement summary accounts. So okay. Okay, there is questions. Why can we have a balance CD? Do we need to have this wages expense zero balance? Yes, we record our accounts for 1 year. For 1 year, maybe start from 1st January until 31st December. Am I right? This is our first month, January. The balance will be bring to February. We have balance CD, balance BD, it continues. But until 31st December is our counting year end. So we don't want to have a balance CD anymore for our revenue, expense, and drawing. We're going to start fresh here, the reporting. Still remember, our income statement is for the year ended, for 1 year ended. So we're not going to prepare income statement for 10 years. We're going to prepare income statement for only 1 year. So our revenue will be zero here. Our expense will also be zero. Our drawing will also be zero. When we start our account on 1st January 2022. So that is the idea. So every year we are going to start fresh. So that's why we need to close this revenue, expense, and drawings accounts. Okay. So what are the journal entry? Very simple. Debit your income summary and credit all your expenses. Credit all your expenses. So this is your income summary. This is your income summary. In a simple word, this is your revenue, total revenue. This is your total expense. That is your total expense. So you have to remember this journal entry. Step number 1, step number 2, we have another 2 steps to go. And step number 3, we're going to close our income summary account. We're going to transfer the balance to the capital accounts. Okay? I believe you still remember the statement of changes in equity. The formula is capital plus net profit minus drawing. So this gives you your closing capital. So we have this figure. This is our total revenue. This is our total expense. And the difference will be your profit. So we're going to transfer this profit to your capital account. Okay. So how to do this is the balance in income summary is the net income. So net income, we are going to close this account by debiting the income summary, and then we're going to transfer that net income to the capital or owner's capital account. So this is your balance, your income summary. This is the revenue. This is the expense, and the difference is 1015. This is the difference. This is the profit. So what I need to do now is I'm going to debit this account and I'm going to transfer, meaning credit my capital account. So this is the actions. Okay, by doing this, you close your income summary account because there's no balance. The balance is zero, no balance here. The balance is zero. So debit income summary if you make profit and then credit your capital. Why credit capital? Because income increase capital. Income increase capital. Yeah. So this one, can you correct this? Not this one, yeah? Okay, this is, yeah, correct this. Okay. Okay. So this is the balance. If you close the account, it'll be like this. Let me correct this for you. 2150, 2150. The balance is zero. The balance is zero. Okay. So our capital now increased by 1015. We transfer the step number 3 is to close your income summary account and then transfer the profit to the capital accounts. Okay. I repeat again. Step number 3 is to close your income summary account. You have your income summary. So from that income summary, the difference will be transferred to the capital account. If you make profit, you're going to debit your income summary, credit your capital. If you make loss, record loss, so you're going to credit your income summary, you're going to debit your capital accounts. Okay, so what are the transactions? Debit income summary 1015, credit capital 1015. So this is step number 3. This is step number 3. Okay, and finally,
Professor.
so and the last part is to close the drawing accounts. Drawing is a debit account. Okay, so to close the drawing accounts, you need to credit your drawing accounts and transfer that amount to your capital. So drawing accounts is debit. This is your drawing. I give you just example, drawing 100. So what you should do is to close this account, you're going to credit by 100. So where this 100 go, it go to your capital accounts, capital. You have your capitals here before this 2000 maybe. And you have profit 1000 maybe minus drawing 100. This is your drawing 100. So we'll have new capital. So these are the 4 steps how to close your accounts. I'm going to show example on how we're going to do this afterwards. Yeah.